You're listening to Money Talks. Time now for the quote of the week. This one comes courtesy of Roger Simon, who's just authored a book called Moral Narcissism. What does that mean? Well, the short form is what you believe or claim to believe or say you believe, not what you do or how you act, or what the results of your action may be, defines you as a person and makes you look good. It's how your life will be judged by others and by yourself. It's fascinating. The 21st century America, almost all of us seem to have concluded that you are what you say you are. You are what you proclaim your values to be, irrespective of their consequences. That's moral narcissism. Well, that's one of the things I've been talking about for years, is people doing all the talk and never walking the walk. Not a good thing. Let me welcome back to the show Paul Beattie, one of the co-founders of Beattie Global Fund. And by the way, I'll add this, is Beattie Global Fund has had a terrific track records over the years, up about 9.5% last year, about double what you were making on the TSX. Paul joins me now on the line. Paul, thanks for finding time for us. And I'm just wondering, this must be a harried time. I mean, you've got so much, in my opinion, central bank manipulation. You've got geopolitical events taking place, like the Brexit vote. I mean, this must be a tough environment to be making investments in.
Yeah. Hi, Mike. Good. Thanks for having me on the show. Yeah, it's we're finding it anyway quite a challenging time, but it's also a frustrating time. But the thing that frustrates us most is the missed opportunities. I mean, it's complicated to invest and lots of dangers out there. On the other hand, there are opportunities everywhere, and just this year alone, the number of stocks that we've missed that have gone up considerabidly is amazing, right? So you got to pick the right sector, and you can do very well.
And I think that's the key, though, isn't it? If you're playing the broad market, I mean, they haven't done much. You're playing in the right individual sector, or you're staying too long in a sector. I mean, there's your risk reward there. I mean, it's very specific in that way.
Absolutely, that's the key. What sector do you want to play? I mean, if you were in the golds at Christmas, I mean, how much have you made this year? It's phenomenal, and the silver stocks are phenomenal, and of course, oil's recovered quite a bit.
But when you look at something like that, Paul, do you feel like it's too late in the game to get into a sector that's grown? Like it seemed to me that the stocks got way ahead of the individual commodity prices. That we had the move in oil, which was obviously significant, but the stocks looked even happier, maybe more so in gold. That you see, 100% move upward in many gold stocks, and obviously the metal hasn't doubled.
No, right. Yeah, I think when it comes to the gold stocks, I mean, so many have moved. Basically, all the large cap and let's call it mid cap. Companies over 500 million, they've moved tremendously. So, but is it over? I think they need gold to go up from here for those stocks to appreciate. And so we've sold all our larger cap and even the mid cap. What we've done though is we've gone down to the cash flowing smaller cap, so $200 million companies that are in production with cash flow, and I think they're terrific value right here. They don't need the gold price to go up for these stocks to double. So we've got a few of them.
Yeah, actually, you mentioned something that I love about the way that at BT Global approaches the market. You have a big focus on cash flow, and I want you just to go a little further and explain that to us, because I think that's a valuable tool. Just to explain to some novice investors who'll be listening today and some people with more experience, but why do you look at cash flow as such an important factor in your decisions? Well,
one of the reasons, of course, is we're finance guys, and we're not gold mining experts by any means. So, but the thing is, we can measure the value of a company and a gold company as well as a utility or anything else based on the enterprise value to EBITDA ratio. Mm-hmm. Now, most people in the gold space will tell you not to do this and spend all your time looking at reserves and more complicated geological issues. But we focus on enterprise value, so the market cap of the company, shares times the price equals the market cap. Add on the debt. Often don't take off the cash because, of course, mining company is going to spend it or invest it. And so you get to enterprise value, and what is the EBITDA? What's the cash flow from the mine or mines? And therefore, what's the ratio? And it's hard to believe. I think, as we've talked about, the Canadian market is quite inefficient, we believe. And we've got, there after this good gold run, there's still a bunch of Canadian companies, listed gold companies, that trade at sub 4 times enterprise value to EBITDA multiples. And whereas the market's moved up to 8 to 10, and the big guys are trading at 15 times.
Mm-hmm. Well, when I look at cash flows as an analytical tool, has that become even more important really since the credit crisis? Because, one of the things that did in so many companies in the immediate aftermath of the credit crisis is they couldn't access, the borrowing markets. They were just out of luck with that, and hence they went down. So it seems to me that having a company that can sort of stay afloat, why? Because it's taken in more money that it's sending out. That's got to be a key, I would think. Even now, with such easy money, you hear lots of stories where banks are reluctant to lend. So I would think that's even a more important factor to consider when making an investment.
I mean, if you have very little debt or no debt, and you're trading at 4 times the cash flow you generate, like, how risky is that for an investor? Mm-hmm. I mean, you're not going bankrupt under any scenario, really.
Yeah.
So, yeah, I think it's the key parameter. I've had this debate with many mining experts and mining expert investors, and they keep telling me it doesn't matter. But to us, it's all that counts.
Yeah. Well, I mean, if you're not in business later, as you say, let's face it, this is a debt-consumed world, whether you're talking at the global level, the sovereign debt crisis, or whether you're talking at the corporate level, and we certainly saw that in the aftermath of both the credit crisis, and seems like it's rearing its head again. I wouldn't want to be in a UK property fund right now. I'm not suggesting they're going to go bankrupt, but they've certainly eliminated withdrawals at this point. I mean, there's lots of examples of where debt is overwhelming, and I look at emerging markets. So, yeah, that's why I would emphasize this kind of a figure: is what's the probability that this company is going to face a disruption if the credit markets freeze up? And that, to me, this is the number one criteria to look at in an individual company. But as I say, especially in this environment, for me.
Yeah, I think so. I mean, you take a look at the Canadian oil patch. The guys that are levered, 6-7 times cash flow. The problem may not be with the company. They would, under normal circumstances, perhaps get through it. But the banks come in and say, "Listen, we're overexposed to energy, so we need to cut back." And then you're done. It's over. So low debt levels and low cash flow multiples, I think, is the way to. These are not, especially in a low interest rate environment, these are not risky investments. Mm-hmm. I mean, you can buy any company at 3 times cash flow with very little debt. I think almost any industry, this is what you want.
One of the things that's a feature of this market, though, is that, like, for example, in BT Global, you've done well in some, obviously you choose stock specific after you've looked at the macro view, and the industry view, and then you go into the stock. But I still can't get over the level of volatility that, let's say the tech sector, which you've had some big winners in, but man, when it turns sharply. And I'm just wondering how you protect yourself against that. When you enter a stock, do you already have your sort of sell parameter in mind, or are you looking for various things to line up and you say, no, I'm out of there?
Well, we run a hedged strategy. So what we'd like to do is, we pick our longs within a sector we've decided to get into. Then we spend most of our time trying to figure out who's expensive in the sector and try to short some of that, against our long positions. We don't do it, exactly, right? 100. If you invest $1, we don't short $1. But, you invest $1, you short maybe 50 cents of a more expensive stock. And then if the sector turns down, as you say, it happens quickly and affects everybody, then you maybe get a chance to add to your short and lighten up in your longs, and you can actually make money on the downside.
I'm talking to Paul Beattie, co-founder of BT Global. I'll get back. I got to take a break, so I'm going to come back. I'm going to ask Paul really what is he can give us some specifics. So pick out the sector, walk us through the methodology that's resulted in another 5-star rating for BT Global. We'll do that in just a couple of moments right on the Money Talks Network. I'm very pleased to have with me Paul Beattie, co-founder of BT Global Growth, 5-star fund, terrific returns. Paul, I want to start with, there's so many things to get to, but if you allow me, let me just start with your view generally, or you can be specific, on the bond market.
Well, we don't invest in many bonds. I haven't for years. Negative interest rates to me it's the biggest shock I've ever seen. I mean, if somebody were to tell me, gold could go to $5,000, everybody thinks that's shocking. Well, how about negative interest rates? That is 5 times more shocking than oil going to 120 or gold going to 5,000. Yeah. So bonds, look, it's been a 30-year bull market in bonds. I think it's coming to an end soon. And when it comes to government bond, I mean, just take a Government of Canada bond, you're getting no return, and the government takes back half your interest anyway in taxes. So we're not there. I think there's way more risk than people understand.
Well, I think the other side of that is that, of course, it's pushed a ton of money into the equity markets. It's and of course the central bankers know darn well what they're doing when they do that kind of stuff. Also, other asset classes, you see it in collectibles. We've certainly experienced it in real estate for that and other reasons in all of Canada, but principally in Greater Vancouver and neighborhoods in Toronto, with the exception, obviously, of Calgary, Edmonton, because of the oil woes there. But what about this? I think one of the themes is we lose confidence in government, lose confidence in bonds. We don't trust them, like they don't trust Greek bonds, that's for sure. That's why you've had so much intervention by central. I still think that's positive for equities. I think that bond market money's got to go somewhere at some point, and I think equity is going to be the number one choice.
Absolutely. I mean, the thing also to keep in mind is that the bond market absolutely dwarfs the stock market. Yeah. Right? The size of it is just quantumly larger. So, you don't need 30% of the bond market to go in equities. All you need is 10%, and equities are heading dramatically higher. And I think
that's such a key point. Sorry, Paul, but I really want people to understand that is that the bond market is astronomically bigger than the stock markets. So all you'd need is some shift of capital, some major fund saying, you know what, I'm going to reallocate. I'm not too comfortable with the bonds. Let's move 10% of our money into stocks. I mean, that's a skyrocketing bull market there.
That's right. I think that's one of the risks that we face and we're concerned about, is that, in fact, we could have a ripping stock market. I'm talking about the U.S., the S&P. It could rocket up on basically that simple issue, people reallocating.
I think that's what I'm in that camp who thinks that's what's about to happen. Can you walk us through maybe right now what you guys are seeing in terms of industries you like and maybe a couple of stocks you like within that framework?
Sure. We spend most of our time trying to figure out what's going to happen in the energy patch because we've come to the conclusion that if you can figure out where energy's going, where is oil going, you'll figure out where about everything else in Canada is going to go, including, of course, the currency. And I wish I had an answer for you, you and your audience, but I really don't. All I'm saying is we're spending all our time trying to figure that one out. We do believe you should own some silver. I think one of the safest bets out there is simply own silver or buy the SLV. There's every time gold goes up 10%, silver's going up 15, 20. It's sort of just gotten started. It's been 5 years since the last run, and I think there's a very good chance you don't need to buy the silver stocks. You just buy silver. We do like gold. We very much like 3 or 4 stocks. I can name a couple that in the gold space trading at sub 4 times cash flow. I mean, I think these things are easily going. Well, they're going one direction. They're going up. What else are we doing? We are Birchcliff has been a terrific. They did a transformational acquisition the other day, and mostly gas or gas liquids, and it's been terrific. The stock is going up seriously every single day, and we kind of like that. Larger cap, and Seymour Schulich's a big investor, and obviously the street loves the deal. So certain oil stocks, real estate stocks. We go into some of the smaller cap stocks, but I mean there's terrific value. Terra Firma is one of our favorites. Maybe. I don't know about the large cap REITs, but sort of the mid cap REITs and smaller cap REITs, I think are good value. Tech space, we don't. I don't think there's any good news in large cap tech land, and we'll see with the earnings of IBM and stuff. I think these big guys are struggling. cell phones, which has been a big driver. It's definitely peaked worldwide, right? We're going to have, in fact, no growth, decline in cell phone, which means decline in chips. Computers are struggling. So the whole tech hardware space, I think, it's going to be challenging, and the valuations are stretched. So we don't like it, and we're shorting them. We're looking at highly levered companies, just as we talked about. I mean, I'm worried about Valiant and Concordia. Healthcare in Canada, right? This Concordia stock's been a huge winner for us and everybody else, but now it's going the other way. Now they have too much debt, and the multiple's very high. The price-earnings ratio is very low, but the multiple of cash flow, the EV to cash flow is extremely high. We're very concerned about these guys. Governments are going to cut. They're not going to pay. They want to cut the drug prices. They can't afford to pay these high drug prices, right? Mm-hmm. So I think that's going to be a tough sector.
Let me come back to the gold sector. Can you give us a couple of examples of the ones that you think are positive, like one or two examples of positive cash flow?
Sure. I mean, there's a Vancouver-based company, Red Eagle. I think that's our favorite gold name by far. We went to actually got in a plane and flew down. They have one operation. It's in Colombia, so it sounds risky. I know, building a mine in Colombia. Okay, but we went down, took a look at it. The mine's built. Okay, they're starting in September 15th. I think they're planning on turning it on and producing gold. It takes 2.5 days for the process to work. So it comes out of the mine, and 2.5 days later they turn into gold doré. So we're going to find out in September if this thing works. And I'm telling you, it's a very impressive operation. Very impressive people. Bob Bell is in charge, and if you do the math, they're going to produce 70,000 ounces. So it's a good size, but not a big mine. It's definitely not a complicated process. The insiders own a ton of stock. The guys that built the mine, the engineering companies and whatnot, own a ton of stock. Finance companies that finance it bought a ton of stock. So it's basically 60% owned by people that know exactly what they're up to. And, you do the math. And, by the way, nobody in Bay Street's done the math because there's not a single research report out on this company. It's probably the first time, I think, in Canadian history where a company finances itself, gets up and running, and not one Bay Street analyst ever covered it. So we've done the math. We've checked it out. And look, they're going to make $1 million U.S. cash flow per week. So you do the math, $50 million a year.
Yeah.
And that's U.S. dollars, and the enterprise value is 180 Canadian.
Well, that's a great example for people to know how you go about it at BT Global. And if people want more information, go to btglobal.ca, btglobal.ca. Paul, really, thanks so much. I always love it when you take time and join us and share your expertise. Great stuff.
Thanks very much, Mike.
My pleasure. Come back. I'll tell you which comment I've made that's got the most reaction. Plus, I've got my shocking stats. Stay with us. Coming up, Aussie Jurek. I don't think he's particularly convinced by those stats coming out in British Columbia about the level of Asian buying, China, of course, specifically on that. I'll ask him about that, too. Also, I've got Drew Zimmerman joining me live from the trading desk, so much more coming your way. One of the things that I hope you're doing is you're joining us on Michael Campbell's Money Talks on Facebook and Money Talks tweet. That way I can get you up to date during the week there, and you can also do that by going to moneytalks.net. I'm always surprised by which comments I make. I make a daily business comment that you can get at moneytalks.net that receives huge reaction. And it's, as I say, every week it's a bit of a revelation. Let me play you the one that had it this week, so listen up to this one.
I got to be honest, I don't really have a lot of time for the love affair big media has with politics. I mean, it's a recipe for missing the forest for the trees, mistaking the petty for the significant. It's dangerous in that it reinforces what I call the superhero politics, which suggests that all of our problems would be solved if we just elected the right person. Unfortunately, the real world's far more complex. With the hyper-focus on political drama, it may fill an entertainment void, but it's also the major reason why the same problems persist year after year, from poverty to economic growth to unemployment. Every issue is shuffled onto the simplicity train, which mitigates against effective solutions. I mean, look at the record on native reserves. Same tragedies, same abysmal condition for decades. By focusing on the latest political gossip, we miss so many big stories. I mean, right now, arguably the biggest financial story in the world is the precarious state of the Italian European banking system, which may be the tip of the iceberg for the entire EU banking system, given the precarious financial position of giants like Deutsche Bank and Credit Suisse. And it barely rates a mention. We hear snippets about Russian aggression in the Baltics, but little more. Even when it comes to U.S. politics, the important story with profound implications isn't the narcissistic, bombastic Donald Trump or the uber ethically challenged Hillary Clinton. It's how did the U.S. democracy get into this sorry state? 324 million people to choose from, and this is the choice? This reflects a major descent in U.S. politics that reeks of cronyism, corruption, and elitism that's going to have profound economic, financial, and social ramifications. But sadly, we don't even ask how it came to pass, let alone where does it lead.
Yeah, there you go. As I say, I'm always surprised at what level of response to get. Some agreed with that, by the way, and others were offended by it. But again, I'm always amazed at how people have put their faith in the political system that so clearly and so regularly benefits the establishment and not you. Time now for this week's shocking stat. This one comes in light of the tragedies that have been happening in the U.S. As I say, we've been asked to absorb so many tragedies in the last short while. Of course, the gun violence in the U.S. Well, this stat comes out of the Chicago Tribune. Are you ready? Last weekend, a total of 43 people were shot in the city of Chicago. Last weekend, 4 of them were killed. Second, weekend gun violence in Chicago pushed the number of people shot in the city to around 2,100. Think about that. That's just this year. 700 more, by the way, than this time last year. But 2,100 people. And here's the knockout blow. So far in 2016, there have been at least 344 murders in Chicago. 344 murders in Chicago. That's 102 more than the same time last year. Unbelievable. It just gives you, it's more than what we're seeing or makes headline news. Because at least I had never heard of that. These stats are absolutely shocking. When you look at that, 344 murders just in the first 6 months and a bit. Unbelievable. 43 shot last weekend. That's the city of Chicago. I'll take a break. I'll come back. Let's go to Ozzie Jurek. So much to talk about, but I'm going to start with, what does he think of the stats that we got published in the last week about the level of Asian buying, especially in Greater Vancouver? I'll do that with Ozzie when we come back on the Money Talks Network. If you're not living out in Greater Vancouver or probably Toronto, you should be thankful, because if you turn on the radio, turn on the television, read the newspapers, a huge percentage of the stories talk about high-priced real estate in a very confused manner, I might add. They don't make a distinction between entry-level buyers and the upper end of the market. There's a big list of what they don't do, and of course they're all demanding government do something as if they've got a magic lever. I kind of imagine so many people, so many voters think that there's a curtain like the Wizard of Oz and they have to just pull the meter the right way and something's going to happen. At some point, the failure of that thought process is going to occur. All you have to do is look at Europe for that one. But we got a big survey out this week from the provincial government saying, look, the numbers of Asian buyers, principally from China, says that, it's not a very big percentage, about 3%. I wanted to talk to Ozzie Jurek about that. Ozzie, what did you think when you heard those kind of numbers?
Yeah, it was kind of interesting. They talked about it at the Asian conference last week, and a lot of agents were there, of course, and everybody raises their eyebrows. I mean, 3% of all of our buyers come from Asia. Yes, is that true? I mean, look at Langley's 40% increase in house prices in 1 year. That was all driven by the locals, all of a sudden like mad, trading with each other. It just doesn't make sense. Yeah. So two Westside agents, they said at least 50% of the detached sales in their offices were to buyers backed by Chinese funding. But Mike, in any case, the crux of the impact on BC's housing market isn't the buyer's address. By having the buyer's address, look, Tina Mack, who's the chairman of the Vancouver chapter of the Asia Real Estate Association of America, said that many wealthy Asian buyers wish to conceal their wealth and assets anyhow. And in Vancouver, it's quite easy for a foreign national to use a proxy, perhaps a relative or a business joint venture partner. Even large investment funds can be legally transferred from free trade zones in Shanghai or Hong Kong directly into Canadian banks. So everybody was agreed that at least the number that was quoted was 10 times higher than what we had based on just the addresses.
Especially in specific neighborhoods. It's a bit misleading when you look at the province as a whole because, they're probably not up in 100 Mile House. They're not up in Vernon. No, the thing is that there's been a concentration of, and I think you're absolutely right, Ozzy, in high-priced homes. So you start in Vancouver because I think they're completely off the mark when they say it's speculation. It's not. I mean, there is that flipping and the shadow flipping. That's on the realtor side. But when you talk about the investment market, no, they're storing their wealth here. They're coming. They want their money out of China. And they want to store the wealth here. And that's, again, understanding that is why on Money Talks, we've been very clear that was a phenomenon about to happen. But let me ask you something like in another official government agency. I mean, I think the CMHC also reports the 3% number.
Yeah, that's why it's so confusing. I think CMHC is always quoted, but I think what CMHC is quoting that 3% of our housing stock in Vancouver is owned by Asians. That's totally different than saying it's 3% of the sales. But the key is this. When you look around the world, in China, we now have one of the largest Chinese foreign property search engines. Just for fun, dear listener, go to UYJUWAI.com. And guess what? You see 6,000 listings there from BC. Clearly, you can see what kind of real estate is being pitched to a Chinese investor.
That's JUWAI.com. Yeah, very interesting stuff when you do that. I got to come back on this something here, Ozzy. Now you've got, again, the public is saying, do something. They don't really care which. And again, it's as if there's some magic, policy wand they can wave. But now you got the city of Vancouver pushing the provincial government out in British Columbia to approve a tax on empty houses. Again, what's your take on that?
Well, I'm absolutely bewildered. I mean, this tax plan is a warning on how bizarre government intervention can really become. I mean, you make that point all the time. That when you're faced with it, that you just can't believe it. I mean, yes, as you point out, everybody wants the government to do something, but this could affect the whole Canadian market scene because the pressure from the voters now wants this insane and unworkable idea to place a tax on vacant homes. The theory is that the owners of the 10,000 vacant homes in the city of Vancouver could be taxed. Now, look at it. The way it would work would be that many absentee owners would either pay the tax rather than deal with short-term rentals, but the vacancy numbers are based on measuring hydro use. I mean, I suggest a couple of timers to turn lights on or off would become very popular if this dumb idea gains traction.
Mm-hmm. And, of course, it's got nothing to do with affordability, nothing to do with the high price at the upper end. But it's just a great example. Just one quick thing before I ask you some hot properties. It is interesting to me how it absolutely gets, for all the discussion of this, I haven't heard anyone discuss private property rights. So they're telling me if they push through on this that I can own something and I'm going to have to live it in a certain number of days a year. I mean, the government's now going to decree on my own private property what I can do in terms of usage. So if I want to, I don't know what, they haven't given us the details. Is it going to be 6 months vacant? That's the problem. 8 months, 10 months, a year. But it's telling me I can't go in sabbatical for a year, for example, or I can't go into the warm desert sun for 6 months of the year. I mean, it's amazing how we just come to accept that government has the rights on our own private property.
Yeah, and you're totally right. I imagine if we were being asked, all the Vancouverites that have properties in Palm Springs and all over the United States, they're being asked to now pay a tax on the absentee owner. There have to be better ways.
Yeah, I hear you. Hey, how about a couple of hot properties? Put a smile on my face before we go.
Well, actually, with all these high-priced properties, we really made an effort this week to find low-priced ones. And we found in Kimberley a one-bedroom unit right on the Mountain Edge Resort. It's an older unit, but it's fully furnished. You've got good views of the Rocky Mountains. Imagine, fully serviced and right on the hill. $63,000, Mike. It's
wow.
$3,150 down and $290 per month, and you really have beaten the rental game. Now, there's a couple of other problems. We found a three-bedroom, two-bathroom house, single-family home, comfortable living, low maintenance, but an older home, $169,900.
You know, Kimberley is such a beautiful area. I know you ski there on such a regular basis. Just an absolutely beautiful area, and also suffering, of course, because we're probably not getting near as many Albertan buyers into that region at this point, because I'm looking at the Calgary housing market and assuming you're not still getting that big rush. So maybe some great deals out there.
No question about it. And the other thing that people have to remember, everything, the rising tide raises all ships. The Okanagan is booming. The Kootenays are now booming. Guess what? I'm in Kimberley just a couple of days now. There's new businesses everywhere. There's a total new area there. Our Thai homes say they're busier than ever. So it's moving throughout the province.
Great stuff, Ozzy. Go out and have a terrific weekend. And for those of you who like that area in Kimberley, you ain't seen nothing till you see Ozzy coming down the hill in the Lederhosen. That is a sight. That's a bucket list sight. Thanks, Ozzy. Have a good weekend.
Thanks for having me, Mike. Just remember, last week I hit an eagle and a birdie and an elk and a moose.
Ozzy Jurek. I'll take a break. I'll come back. We're going to go live to the trading desk. Plus, I've got a Goofy Award. All of that. Stay with us right here on the Money Talks Network. Glad you're with us. Joining me now, I've got Drew Zimmerman live from the trading desk at PI Financial. Drew, I mean, I just love the level of volatility. You guys who are not playing it, you are investing, trading on this basis. You know, I mean, you saw the post-Brexit moves. I mean, it's been incredible.
Exactly, Mike, and it hasn't stopped. We've had huge moves as everybody rushed for safety post-Brexit. And this week, I think we may have seen a turn in that. We had the Japanese yen fall almost 5% this week alone on the back of Abe winning an election. And the last time he did that, the yen dropped 25% within a year. But it's more than that right now.
You know, it's interesting. Of all the moves that were post-Brexit, I mean, we clearly stated on this show, you know, the pound would go down, the euro is going to be under pressure, and I think continue for years. U.S. dollar beneficiary, safe haven bonds like Germany, Switzerland, you know, the U.S. would all do well. I did not see that sharp rise in the immediate aftermath of the yen. I mean, it went way further than I thought it would.
Exactly. It got the flight to safety that a lot of the bonds got, gold got, that sort of thing. But this last week, we had a weekly key reversal lower in both the U.S. long bond and the gold market at the same time that the Japanese yen was dropping 5%. So what does that tell us? That tells us that the market may have got too emotional and pushed these safety assets too far in the 2 weeks after the Brexit vote, and now we may be going back the other way.
Just very quickly translating that for people. So what you're saying is that maybe we've seen the low in the yield, the high in the price, but, you know, like, so U.S. long bonds, off the top of my head, went to about 1.3% in the 10 years. So you're saying that's probably the low for the year on that one.
Exactly. I think we may have seen the low yield for the year. That's a bold statement, especially given the events that were going on Friday and continue here today. But at the same time, I do think the emotions just got pushed too far. This last week, we had a good string of U.S. data. We got data out of China that proved they were stable at the very least. And I think we can move higher.
I'm talking with Drew Zimmerman, PI Financial, does investments and commodity future advisor on that. Drew, just very, very quickly, I want to come back to gold. You're saying that it had a weekly reversal. Just tell me what you see coming in the next short while.
With gold, we've got a huge position risk. That is, we've had a huge buildup in the last 6 months of everybody getting into gold. We've seen it in the ETFs. We've seen it in the COMEX market. And what that means is there's not a lot of new marginal buyers that can come into a market. So that's where we worry about some downside price risk. And when you see a weekly key reversal, that's a strong technical indication that we may have a little rollover. You know, I'm not saying we're going to the lows, but I'm looking for a pullback in the price.
Great stuff. Drew Zimmerman works at PI Financial in Vancouver. Thanks, Drew. Appreciate it.
Thanks for having me on, Mike.
Time now for my thanks to Drew and everyone else, by the way, on that one. Time now for this week's Goofy Award. And remember, Money Talks is brought to you by Solera Club. You can find more information on this royalty-based, meaning you get paid first. There are no fees with it, and it's in the tech sector. For more information, go to soleraclub.com. This week's Goofy, well, they're calling it Hairgate in France. You may have seen this one because it's so outrageous. Everyone wanted a piece of it. But François Hollande won the French presidential election. Remember, he's the head of the socialist government there in 2012 after promising voters he would be a normal head of state. But it's just been revealed that the day after his inauguration, they hired a Parisian hairdresser to work full-time on just the president's hair on a salary, and this is the goofy part, of $14,000 plus a month. Now, keep in mind, if you go to a men's hair salon, even the high-end Parisian coiffure, that costs about $50 to $65. So getting one every day at those kind of rates would cost under $2,000. He's paying $14,000 plus. You know, this is a kind of elitist establishment kind of expenses that fans the anti-establishment feigns. I think that most Canadians are shocked by stories like this, or the fact that President Obama sent $70 million on vacations, taxpayers' dollars though, or that Hillary Clinton has not driven a car in over 25 years because she always has a limo and a driver, or the size and cost of Prime Minister Trudeau's entourage to the state dinner in Washington. But that's because most of us can't imagine it. They can't imagine it themselves unless they win the lottery. Well, being elected to government is not much different, only they do it on your dime. That's all the time we have this week. Please join us on MoneyTalks.net or Michael Campbell's Facebook page, Michael Campbell's Money Talks, or Money Talks tweet. All of that will keep you up to date on the latest information that impacts your financial life. Go out and have a terrific weekend. Thanks for listening.